Well, with Inseego stock jumping 11.5% today in a time in which the market was down a solid 5%, we take a look. I think it's time to reevaluate my previous opinion that I had on Inseego. Take another look and see if this stock is worth it now. Is this stock worth buying right now? Let's just take a darn look at it. Why is it up 11.5% today? That's obviously the first thing we want to cover. Because obviously, when a stock jumps up massively, you get a big rush of the fear of missing out crowd. They don't want to miss out on the stock taking off. Do I think there's fear of the stock taking off a large bit in the short term? Not necessarily. I think overall we're seeing market pain. There's no doubt about it. And we're looking since this real epidemic started. Since highs, they went down as much as 50%, but from those lows, they're back up another 70%. So really from highs, they're still around 25% down. All things considered, that's not too crazy, because if you think about it, overall, if we're looking at it since even 2016, this thing is up a solid 400%. So nothing too crazy going on with this thing. Obviously, if you look max, you see a little .com bubble going on there, but let's forget about that. But today's jump of 11%, we see it's seeing unprecedented demand for its 4G and 5G mobile hotspots. That makes a lot of sense. We'll go into their specific words here. The company's ramped up output, doubled production, and they have the ability to expand 5 to 6 times their normal volumes in the near term. Very significant growth there. We're prepared to scale up quickly, not only for the pandemic, but as mobile traffic continues to grow unabated year after year and drives the need for more 5G networks. Mobile operations are not only accelerating 5G investments, but also providing devices like Inseego's 4G and 5G MiFi mobile hotspots and modems. So directly from their words, we want to take a look. Obviously we see that article there. It's what I looked immediately once I saw the stock was up. It's one I watched, so I saw the news article on it anyway. So with hundreds of millions of business and government employees, students, and others now connecting from home, Inseego's plug-and-play wireless products are meeting the need for fast, reliable, secure internet connections. These products also provide a fast and easy solution for 25 million Americans who currently have no home broadband at all, by delivering high-speed internet access over a wireless network using a compact device that fits in the palm of your hand. Pretty cool, and you see a picture of it here listed on or shown on the left. That's pretty darn cool in my opinion. Obviously, that's something I find interesting. A lot of people out on the go. As technology only grows, we'll see a bigger use of this type of technology, mobile hotspots. It'll be a bigger thing besides using your phone, obviously. But again, the mobile data on that can be somewhat iffy sometimes. It all just depends. We're seeing unprecedented demand for our wireless mobile broadband devices, spurred by the dramatic change in how we are living, working, and learning from home. Our hotspots provide instant access to broadband connectivity and unlock all the applications used for not only home but also on the go. With outstanding performance, bulletproof security, and reliable connections to corporate networks, learning resources, healthcare providers, friends, and family, says Dan Mondor, the CEO. So obviously, very interesting stuff. Let's look at what is Inseego. Obviously, people are going to be interested about what is Inseego. We need to know what the company is, obviously. So directly from their page here, directly from them, okay? Inseego is an industry pioneer that enables high-performance mobile applications for large enterprise verticals, service providers, and small, medium businesses around the globe. Our product portfolio consists of enterprise SaaS solutions and IoT, Internet of Things and mobile solutions, which together form the backbone of compelling, intelligent, and reliable and secure IoT services with deep business intelligence. Inseego powers mission-critical applications with zero unscheduled downtime mandate. So they don't want any downtime besides what they schedule for updates and stuff like that. They don't want any downtime. They don't want the network to go down ever. Pretty exciting. That's a mandate. such as asset tracking, fleet management, industrial IoT, SD-WAN, failover management, and mobile broadband services. Our solutions are powered by our key innovations in purpose and built SaaS cloud platforms, IoT, and mobile technologies during the newly emerging 5G technology. Making 5G real. Hashtag making 5G real. Yeah, I'm not tweeting any hashtags. You can leave those at home. But their core values, obviously, are sense of urgency. They need to get that information out. It's important that people have the access to mobile data quickly. They're customer focused. They are holding themselves accountable, which you can see from their zero unscheduled downtime mandate, their market-driven innovation, and they have integrity. Don't we all really want that? Their quality policy is through innovation, teamwork, commitment to satisfy applicable requirements, and continuous improvement. We will deliver solutions that exceed customer expectations. So that's pretty cool, right? Learn a little bit about the business. Obviously, we know that they have solutions for work and home. And these modems that they're developing, these MiFi modems, really help in terms of these mobile hotspot. Millions of people are now working and studying from home. And for many of them, these are uncharted waters. A lot of devices competing for throughput on one network can cause internal traffic issues and downgrade performance when working remotely. Companies and families must be empowered to take precautions against unauthorized users on their home networks and ensure that they have the adequate speeds and bandwidth to handle the workload. Our solutions enable employees in the private and public sector to work from home, enable students to school from home, and help first responders, K-12 schools, and higher education institutions to rapidly meet the need for reliable and secure internet access solutions. This is huge. This is huge for this company. I hate to say that this is a big opportunity for them, but it really is. This is going to work out well for them because people are going to need this. If you think about your wireless connection you have now, tell me how many of you would probably be satisfied and you've never experienced downtime in your wireless connection. I bet the number used probably minimal. Downtime something we experience with all of our wireless connection. Everyone does. But Inseego's policy is through the use of these separate devices, so separate from your normal Wi-Fi, you can use this for uninterrupted connection during conference calls, during school meetings, stuff like that. And I think that's pretty exciting. If you think about just the massive increase, you look at the numbers from Zoom, from Skype, the massive increase of over 500% usage in most of these cases in the month of March just due to this. You'll see the numbers continuously increase as well. A lot of remote business is getting done. Companies still have to work through this, even though they can't necessarily meet in person. Companies still have to work, and they're doing it all through Zoom, and really just all through video conference. And people want uninterrupted connection, and Inseego offers that to them. So that's very exciting for Inseego, for sure. One thing I did want to mention as well, as you can see from who they are partnered with, who trust them, as they say, they trust us. You should too. Sprint and T-Mobile, really one of the same. It's really all T-Mobile. TELUS, AECOM, KLM, Bell, US Foods, and CBRE. One thing I want to note there is T-Mobile. T-Mobile uses part of their network as well. What I want to say about T-Mobile is, well, if you look at T-Mobile user growth, T-Mobile, a company that trusts them, is a company that's continuously growing users consistently through the years. They've been doing very well and becoming one of the top providers out there. They're growing users, subscribers, I should say. They're growing them rapidly. And that only seeks to benefit Inseego, all things considered. Really, they're just going to only grow from there. Obviously, you see they're going to get the Sprint consumer base into them. Once this deal finally goes through for T-Mobile purchasing them, you'll see just a continuous growth for T-Mobile, which means usually if they stick with Inseego, which they should, it'll be a higher, usually the contract will be higher for them. They're going to get paid more to do business with them. So Inseego seeks to benefit from this deal they have with T-Mobile, no doubt. One thing I want to look at, obviously, is I think it's important to look at the financials. We know what the business is about, and I think I really like what the business is about. It's a company that should do super well in the future. They're poised to be very successful, but we have to look first at the most recent earnings. Is what I would like to look at. Most recently, you see they posted a revenue down 6% year over year, but beat by 0.42 million, 52.33 million. Non-GAAP EPS of negative 10 cents and GAAP EPS of negative 16, so it's not a profitable company. That is one thing you need to notice. If we look at what they have going on here, so this is from March 11th, I believe is when they reported earnings. Yeah, March 11th, you see here. So they signed 5G product agreements with leading mobile networks, which again you see is T-Mobile. 5G trials, they have 5G trials underway in 20 leading mobile operators worldwide. They closed a $25 million private placement transaction with Mubadala. So that's providing capital. So that's pretty well, someone investing in them to get, so they could have money. Obviously, Inseego is a company not profitable. They need money. And they significantly strengthened their balance sheet. I'd like to look at that as well. So we're definitely going to see that. Nearly $11 million in 5G revenue in 2019 alone. Crazy stuff if you think about the fact that they're only going to grow from there because of the fact that 5G is going to become a lot more normalized, and it will be the future here in the next year. So 5G is going to be significant, and they can only seek to benefit from this. They've got a 5G mobile hotspot as well with the Vodafone Qatar. Exciting stuff. They launched the C-Track Pegasus Cloud platform. Again, another just they've got everything going on for them. What can I say? C-Track fleet bookings grew approximately 36% year over year, and this C-Track fleet bookings, really this C-Track fleet is more of a way to actually track people. It's something used by firefighters primarily at the moment. So firefighters can use this to pretty much implant chip in the uniform of the person, these specific firefighters, so they can actually be tracked from an outside source. The people operating the mission, the people who are actually, it's hard to say mission, but, buildings on fire, we want to know where the whole team's at. People can know where the team's at because of this. It'll give them an exact location of where that person is in correlation to everyone else. So that is what's really cool about that C-Track fleet. Now I want to take a look, obviously, at this balance sheet here as they touted. They touted this balance sheet. Let me just take a look at the balance sheet. Where do we have this cash and cash equivalents? So what do we want to see? Obviously, we see cash flows here. You got to love seeing that. Let's look right here. I skipped right past your balance sheet. I'm so sorry. Balance sheet, so current assets, you see actually overall from a current assets perspective, from a cash and cash equivalents, this is in terms of thousands, so $31 million they used to have in December of last year, or really 2 years ago, 2018. This year, 2019, not really this year, I'm saying things weird, but 2019, they only had $12 million, so you see a lot loss in cash there, but from a total assets perspective, it's really the same deal. So really all that they lost was that $20 million that they had in cash and cash equivalents. Overall, everything else has stayed pretty strong as far as accounts receivable and inventories, and their prepaid expenses relatively similar. From a total assets in general, you see $161 million, which is actually similar to what they had a year ago. So that's not bad, all things considered. Same thing. From a total current liabilities, you see they actually decreased the total current liabilities. They paid down around $10 million there in short-term debt. Very exciting stuff for them because that's where 20,000 of that, or 20 million of that 10 million went. They paid $10 million in debt down. From a total liabilities perspective, you're seeing the exact same number, 198 million, and that's again versus 161 million. So it's a company that's actually, all things considered, not doing too poorly in terms of their financials. all things considered, even with not being a profitable company right now, they're doing well in terms of what they can do. They're in the business where they really can turn on the profit margin, no doubt. A company like them has the ability to have such a high margin and really just slam through profit. Right now, they're focused really on growth. And that's where you see a decrease in profit. Once they get to a point where they focus on profitability, this company can be a profit beast. I don't doubt it at all that this company can do super well. Right now, the balance sheet's not awful. I don't like that there's more liability than what you see in terms of assets. You see a deficit right now for the shareholders of $37 million. It could be a lot worse, though. Could be a lot worse. From valuation perspective, you really can't see much on this company. Price to sales of over 2. Obviously, no price to book. Negative earner. Forward PE obviously doesn't exist because they're not expecting profitability too much in the next year. So, scary stuff in terms of the profitability. But again, this company's receiving investments. I think it'll do well. Financials in the past, obviously from income statement perspective, you see a decrease in revenue over the past few years because there's not really been the next new thing. The next new thing is now, and it is 5G, and that's where this company plans on thriving. That is the growth factor for this company. And I won't go without saying that there are certainly negatives to think about with this company. You see the net income line, not pretty, not a pretty net income line. You see growth actually in this loss over the past 2 years. Quite a significant growth, and you don't like to see it, but there are a lot of positives to this company. In my perspective, this company, in my perspective, is going to get a speculative buy rating. I think it's a company that certainly could take off in the future. I think they can do super well. They have the ability to really grow that profit, no doubt about it, and really just skyrocket that revenue with this 5G connection, especially with this quarter. I could see a very good quarter for them coming up. This next quarter they're reporting, I could see it being fantastic for them, and it should be, absolutely. There are big things coming from this company, I believe. I think it's a speculative buy. I don't think it should be more than like a 5% of your portfolio, but I think they could do super well. And I think it's a stock worth looking at. Do your own knowledge, do your own research as well. Take a look at this company and see what you think. Thank you.